Increasing market penetration and widening regulation are combining to drive ESG integration across the European investment community. But what happens to ESG when it has achieved currency across the entire market? Views on sustainable finance vary widely in terms of motives and objectives, while regional differences and regulatory fragmentation also lead to varied perspectives. Some investors integrate ESG criteria solely to enhance financial returns, while others may add a double materiality approach and align portfolios to stakeholder values. Moreover, impact investing is defined in multiple ways, underscoring that no two investors and their sustainable finance goals are alike. As the mainstream investment market embraces ESG, responsible investors will in 2022 benefit from focusing on transparency about their sustainability strategies and, most importantly, outcomes. Quality will shine through. Fortunately for responsible investors, Brexit has not to date resulted in much feared regulatory uncertainty. There are striking similarities in the approaches being taken to climate change on both sides of the channel, when it comes to net zero commitments, a green taxonomy, stricter disclosures, and the emission trading systems. While the UK has stronger commitments, the EU appears to be further down the regulatory road. Perhaps responsible investors may benefit from positive competition on who is first to net zero. In 2022, investors will have an opportunity to use their influence to push for effective and harmonized regulation, particularly across the wider EMEA region, where regulatory approaches still vary. The topics of biodiversity and a circular economy have already moved the European understanding of sustainability beyond the focus on climate change. In 2022, the European Union will move forward with a social taxonomy, raising a number of discussions emphasizing the importance of the S in ESG. This development will force investors to take practical steps to evaluate social risks through their investment frameworks, looking both at norm-based and risk management approaches. Investors are already turning to social financing when seeking impact, but how exactly this impact is defined and whether it will capture the how rather than the what of a finance activity will be determined in the coming months. This will likely trigger debate over values relative to value, and may suggest that the ESG story is far from complete. Expect an exciting 2022 for responsible investing in the EMEA region. If you wish to learn more about our solutions, please visit iss-esg.com.